let's get going, shall we? Let's welcome our first panel of the day, Ben Simpson from Collective Shift, which provides tools to navigate digital assets, and Ryan McCall, CEO of crypto investment platform Zero Cap. Gentlemen, welcome to Cracking Crypto. Look, when we think about crypto, it's almost hard to describe. My 7-year-old this morning asked me what crypto is. For the purpose of this discussion, we'll try to keep it to the coins. I mean, is that really where you see, Ryan, ground zero for the whole crypto ecosystem?
Yeah, absolutely. Look, that's where it all started, right? With Bitcoin back in 2008, born out of the global financial crisis. So really, that's the foundations and the fundamentals of crypto technology or in cryptocurrency, as an asset class. Obviously, it's evolved well beyond that now, and there's all kinds of really interesting use cases that we're seeing coming out of it, which I'm sure we'll get into on the call.
And Ben, certainly an attraction initially for a lot of investors was the fact that crypto is seen as being a non-correlated asset. I don't think you can really say that at the moment because we've seen, particularly recently with the major coins, tend to be following what's going on with equities.
Yeah, unfortunately for a lot of the crypto investors that probably thought Bitcoin was going to maybe break away from the stock market and be that inflation hedge that we all believe it to be. Right now, I just think the reality of the world is that a lot of people see Bitcoin and other cryptocurrencies as really a risk-on asset. And right now people are trying to sell those risk-on assets like tech stocks. We've seen tech stocks recently go down, Netflix down 70%, Airbnb. And Bitcoin's being, connected or correlated to those markets. And I think really it might take a little bit of time for the education of those investors to really be up to speed on why some of those fundamentals of Bitcoin is actually more like a risk-off asset with those inflation hedge qualities. So yeah, it's going to take a little bit of time, but hopefully we get there one day.
Yeah, but Ben, does that also speak to, I suppose, some of the more recent adopters or recent buyers, I guess, of cryptocurrencies in this sort of enthusiastic market period that we were in through the pandemic, that a lot of people came into it actually not really, perhaps for the right reasons?
Yeah, so I think a stat that CNBC put out recently was 1 in 3 crypto investors don't actually know what they're doing, or they don't know what they've purchased. And I think, again, that education gap is pretty prominent in the space. But what we've seen with the on-chain data of Bitcoin is actually 65% of the total supply, so the total amount of Bitcoin in circulation, is owned by holders that haven't sold in longer than a year. And so what we're seeing is that the sophisticated investors in Bitcoin that really understand what the technology is about and its potential are actually buying during this time. We're actually seeing a lot of accumulation from those longer term holders. It's the shorter term holders, those that potentially don't understand it as much, and the shorter term, cash grab sort of investors. They're the ones that's bought back late 2021 when Bitcoin went up to $50,000, $60,000, and eventually sold 3 months later as Bitcoin corrected. So, again, I think it's an education gap. People may be chasing the hype, chasing the FOMO of missing out on those gains in crypto. As we see, it's one of the most volatile markets in the world. But I think it's the accumulation phase which we're seeing now, which is the most interesting for us.
Yeah, Ryan, further to that, I think it's important to draw that distinction between investing and speculation. We've certainly seen a lot of both in that space at the moment.
Yeah, absolutely. It's a really good point. The way that we think about approaching crypto as an asset class is an investment. It's not speculation, and we have seen a lot of speculative activity, particularly on the retail side. There's a lot of booms and busts in crypto, and it's very short lifespan. Those cycles tend to be very condensed, and we get these massive hype phases. You look at the Gartner hype cycle is a really good model for this. When you have a lot of hype, a lot of it is media driven. Someone's got a mate that made a lot of money off crypto, and now they want to get a piece of it, and you end up getting this speculative momentum where you hit the peak of, this absolute hype peak, and we're starting to come off the back of that now, where we're at in the cycle. But really, investors need to take a long-term view. Look at the fundamental value of the projects they're investing in, and think about how they're going to maintain value through those cycles. And you will get real value out the back of it. A lot of these, new cryptos that are popping up will go to zero. So that's why it is important to really understand what you're investing in and think about long-term value.
Yeah, Ryan, on that point, you mentioned those new cryptos. I think last check, there are more than 17,000 coins and tokens out there. Clearly, you would say less than 1% are going to survive. To that point, how do you actually work out where there's value and the use case for a coin?
Yeah, look, it's a good question, and really people should think about it the same way that they would any other business, right? Firstly, I would just say don't get caught up in the hype. It is important to really understand the technology, and it can be quite complex, but there's a lot of great resources out there that really simplify it and break it down. So I think it's important to understand what you're investing in. But as far as finding value, you can have a look at the problem that they're trying to solve. Is this particular crypto or the project or the team, are they solving a real world problem, or are they just trying to jam crypto into a problem that doesn't really need to be solved? Have a look at the founding team, their history, their background. Have they got the experience to be able to tackle the problem, that they're looking to solve? Who are the major investors in the project? So, this is similar to a kind of venture capital approach to investing. Who are the investors that have backed the project, and are they going to help the project succeed? What kind of community has been built around it? And you can have a look at, their forums online, their website, their Twitter, their Reddit, that sort of thing. Is there much of a engaged community that's actually built around it? So all these sorts of things can indicate whether or not the project actually has legs. Of course, do they actually have a functional product is something that's important as well. And does it have users? Is anyone actually using this? Something that we saw 2017 is, a really good example of this, where a lot of new cryptos were raising a lot of money really just off the back of an idea. They didn't have any sort of functional product. And then we had the big crash at the end of 2017, beginning of 2018, where a lot of those projects went to zero. So, it really just comes back to fundamentals.
But all of that being said, Ben, is volatility something that investors should just get used to? Why would crypto be immune to bouts of volatility when we clearly see what's happening in stock markets? That's why, we're seeing Bitcoin and the like follow centralized exchanges and the price action there.
So I think
in
crypto markets...
Sorry.
Oh, no, you're right, mate. I think in crypto markets, we've got to look at the comparable size of the market versus, let's say the stock market. So for example, Bitcoin itself is around just under $1 trillion market cap, and all cryptocurrencies is only around $2 trillion. Now, the Nasdaq and the wider equities markets are in the multiple sort of 2 and 3 digit sort of size of market cap. So what we see on smaller market caps is huge, bigger moves, and that volatility is just due to the size of the market cap. But over time, I think as the market grows, and I think the CEO of Coinbase came out today and said that he thinks within 10 years there'll be over 1 billion people that have used crypto or actively using it. And we're only about 200 million now. So we could see the market cap of crypto continue to increase to 5, 6, 10, maybe beyond $1 trillion in the market cap. And as we get bigger, the volatility will decrease. And the last point I'll say on the volatility is markets are driven by human emotion and psychology. And in crypto, because of those bigger moves, it creates even more FOMO when the markets go up and even more panic when the markets go down. So where the markets probably should trade is, let's just say between, a 10 or 20% move, crypto goes even further because of those human emotions. And because of the volatility, people, as I said, get more excited when it goes up and get more worried when it goes down. And that's why we see that volatility.
And did you have something to add to that? Yeah.
Yeah, sorry, I was just going to say, look, I think we are now really starting to see the asset class going mainstream, particularly from institutions. So here in Australia, we've got regulators now and government that's actually forming policy around how the industry should be regulated, and that's something new. and it's something that will give institutional investors confidence to actually get into the asset class. Like financial advisors starting to get their clients in, banks starting to make some moves, and eventually we'll see superannuation funds coming into the space. And that, as we get more investment into the space from an institutional perspective, that will start to reduce the volatility. I think what we're seeing is just a natural evolution of a market.
Yeah, I'm just wondering, Ben, whether you agree with that. Then obviously we're seeing what's going on as far as ETFs. They're coming. That's another option for investors. Obviously, further that, just the derivatives that may be well available. And Ryan also mentions their retirement funds. We're seeing that in the States. Now, Fidelity are going into that space. So is it just a matter of time before perhaps that space is opened up here once we get definitive regulation?
Yeah, so I'm actually in Miami at the moment. I travelled over here for there's an annual Bitcoin conference, and there's a lot of bankers and policymakers at this event talking about the superannuation funds or retirement funds over here in the US are really, sort of knocking at the door to get into Bitcoin and crypto. But the problem is that policy and that legislation, there hasn't been enough clear clarity from the US government, for example, or the SEC around, is this asset class going to be available for these institutions? At the moment, it's not clear enough. It's a little bit too grey for them to really put in, we're talking, hundreds of billions, if not trillions of dollars. So policy really needs to be clear cut for regulation across the world, and we're probably not quite there yet. But I think, as Ryan was saying, that's the next wave of adoption, when you don't need to sign up to Coinbase or, Binance, buy crypto. You can do it through your superannuation fund, or you can do it through your financial advisor. I think that's the next wave of adoption.
Okay, you brought up Bitcoin. I'd like to talk about coins. I had a chat with Chloe White from Genesis Block. She's coming up a little bit later in the program, but she said that Bitcoin is the OG. It's a simple product. It does what it says on the tin. She says it's not going to change. It's a very usable network. And so for her, Bitcoin is it in terms of coins. I mean, Ben, there are 17,000 coins out there, around that amount. Most of them have no value at all. Is Bitcoin it for you?
I think by my t-shirt you might be able to see that. Look, I don't, in the crypto space we have this term called Bitcoin maxis, where basically it's like that's the only thing that people believe in, and that's the only coin that they follow. I wouldn't position myself in that boat. I'm certainly Bitcoin, like the quote you said there from Chloe, agree. Bitcoin is what it is. It's not trying to do anything outside of be a digital currency and a digital store of wealth. It's the strongest network in the world, and it's never gone down, and I think it's going to continue to grow over the next few years. So I'm super bullish about Bitcoin. But there are certain other sectors within crypto that we've spoken about. I agree. I think 95% of the tokens right now are either cash grabs or a bit of nonsense. And I think we need these market cycles to flush out those, I guess, altcoins that aren't valuable. That's what these natural market cycles do. They flush out the bad, and it's the same as the .com era. When the Amazons of the world and Microsofts lasted, and pet.com or dog.com went to zero. It's the same thing, in my opinion. It's about finding, like Ryan said at the start, finding the real world utility, real world products that need to be tokenized, that are taking out that middleman that can actually deliver real world value. And that is difficult to find, especially in this market, but that's what makes our job that much more fun.
Okay, so same question to you, Ryan, as well. Is Bitcoin it? And in this, we'll sort of address one of the questions that's come in from our viewers. Thank you so much for bringing them all in, guys. Is Bitcoin it for you? And our viewers saying, so what problem are Shiba Inu and ApeCoin and all the other so-called meme coins supposed to solve? I mean, is that being too cerebral about it? Are some of these alternative coins not even really meant to solve a problem?
Yeah, look, I would say Bitcoin is certainly not it, and but any crypto investor should have Bitcoin in their portfolio. It is, as Chloe said, the OG. It's really proven itself to be able to weather, some pretty rough storms. And now that we have, regulation and the asset class going mainstream, it is definitely here to stay. So absolutely should be a part of any crypto investor's portfolio. But there are lots of others that are solving real world problems, disintermediating in traditional financial systems. There are also cryptocurrencies that are bridging one another, right? So, for example, Bitcoin and Ethereum, they're two separate blockchains. They don't natively talk to one another, or they're not interoperable, right? So there's other cryptocurrencies that are looking to be a bridge or to solve that problem. You know, and there's all kinds of DeFi and Web3, NFTs, metaverse. You know, these things are somewhat speculative, but there are also real problems that are you know, being solved. So I think the same with any investment portfolio, right? It should be diversified. To the viewer's question about Shiba Inu and I can't remember the other one.
Dogecoin, it was ApeCoin, yeah, ApeCoin.
ApeCoin, right. I don't think these are solving real problems. That's just pure speculation. And the fact that they're called meme coins is probably a bit of a hint that they're not supposed to be taken very seriously. Now, some people will make a lot of money out of these. You know, if you get in and you get out at the right time, then good for you. But I would call that speculation, not an investment.
Yeah, Ben, just wondering what your thoughts are on that. Obviously, you've spoken about why you would need to hold Bitcoin in your portfolio. Is it a matter of spreading the risk, though? And particularly when you look at the top 5 or 10 coins, and some of them obviously Ethereum, and you've got the alternatives there as far as those platforms that offer smart contracts, you know, Solana, Cardano and the like. Can they all coexist, or are we going to need to pick a winner?
Yeah, I think it's the same thesis if we were to look at your stock portfolio, if you were investing in equities, right? Like for some investors, you might want to go more concentrated because you think you found the winner. So you go all in on Ethereum, for example. Or for those that want to spread their risk and build more of a diversified portfolio, you might, you know, actually sprinkle your seeds a little bit. So you might hold some layer 1s, some layer 2s, DeFi projects. And that's what we recommend to really, you know, we don't know. It's still too early to see if Ethereum's going to win or Solana's going to win. And it might not be, an actual, I guess, endpoint where it is A or B is the winner. They could live in tandem. You know, all of these blockchains, all of these different crypto assets have different use cases and are building for different things. So for me, it's about building a diversified portfolio. And, you know, back to the ApeCoin discussion, I don't know, it's a fascinating thing, these meme coins, because it's, for me, I see a lot of people come into crypto chasing those. Again, it's because of the FOMO, it's because of the hype. People, you know, the younger generation, I guess, or new people coming into crypto actually see Bitcoin as boring. You know, Bitcoin's old and Bitcoin's, you know, we want to find the new next best thing. But it's, you know, when you start to trade some of those lower altcoins and lower cap markets, it is quite dangerous, especially if you're chasing FOMO and chasing hype. I mean, we saw ApeCoin over the weekend. I think it went from $16 to $24 off the back of an announcement of their metaverse launch. And then within a few hours, it was down 40%. And the number of messages I received before that dump of people wanting to buy ApeCoin because of this upcoming launch, it's scary. Time to buy, you know, when you're chasing the FOMO, chasing the hype. So there's definitely an education piece we need to continue to promote for new investors.
Well, you know, let's get then an approach to investing, Ryan, from you. Tell us about Zero Cap. I know you work on behalf of family offices, for example. So for those out there watching, thinking about taking a nibble into the crypto space with coins, where do you start?
Yeah, it's a good question. So, you know, we take a fairly sophisticated approach to investment with our clients, and we don't just stick strictly to going long on cryptocurrencies either. You know, we'll be looking at derivative markets, options, futures, structured products. You know, investing across different themes in the space. You know, I mentioned DeFi, Web3, metaverse, other sort of emerging trends. But, you know, it does start with Bitcoin and Ethereum, really the two major players in the crypto space, and just such a core part of the ecosystem. So, you know, really they should make up, you know, if not the majority, then a substantial part of the portfolio. And then it comes down to, you know, what's your investment strategy? What's your time horizon? And this is why it's important to think about, you know, short-term speculating versus long-term investment. you pointed out that there is a lot of volatility in the crypto market. Like, there's no getting around that, right? That is just the nature of the beast at the moment, at least. So, if you're looking at some of these altcoins beyond the majors, even with the majors, really, you're going to have some fairly significant drawdown. So, the amount that the price is going to drop from sort of peak to wherever it falls to. So you do need to take a long-term view so that you can ride out that volatility. So if you've got a longer-term view, you can weather more volatility. If you've got a short-term view, you want to be more conservative with your approach, stick to more of those majors. But most portfolios that we're looking at will have maybe 10 to 15 different assets in them, again, with the bulk of that being Bitcoin, Ethereum, and then spreading it out across a number of different themes. If you want to take a more sophisticated approach, then you can look at those derivative markets and actually profit from the volatility. So that's something that you do need to do with an expert, a firm like us. You wouldn't want to be just trading derivatives openly on an exchange, particularly if you've got leverage. So yeah, that's the way we think about it.
Ben, we're almost out of time, but we've got another question from the audience just in regards to Cardano. I mentioned that earlier, of course, wanting to know, it was seen as the real alternative to Ethereum. The question being, what's happened to it?
There seems to be always a new Ethereum killer popping up, every few weeks. Look, I think Cardano's continuing to do good things. Actually, one of the founders of Cardano used to, basically, he was one of the original founding members of Ethereum, and he had different viewpoints on where the blockchain should go. So he went and built Cardano as a competing blockchain. But again, I don't think it's a matter of A or B. Like, I think a lot of these blockchains will probably continue to compete, just like we see a lot of tech stocks competing in the stock market. So personally, I don't own Cardano, but I think they're continuing to put out good announcements, and they've got a lot of developer activity. And I even looked in the stat recently around a lot of big investor whales in crypto continuing to accumulate Cardano. So I wouldn't have any reason to be bearish on it.
Ben, just a quick one, only because I'm trying to keep our viewers happy, and I'm sure you guys would like to as well. Just saying, what do you think of Bitcoin Cash, Bitcoin Gold, Bitcoin SV? I don't even know what that is, to be honest, which are almost identical in their structure.
Yeah, these are just all what we call forks of Bitcoin. So it's when someone breaks off the code, basically, of Bitcoin, and tries to build their own version with a few different variables. I'm personally not a fan of any of them. Again, Bitcoin for me is the true and true. Nothing needs to change in my opinion. I certainly don't own any of the alternatives.
All right, an explanation, Nadine. Bitcoin SV, Satoshi Vision.
Oh, thank you,
supposedly. Getting back to the original
should I be
vision.
embarrassed or not?
No.
Okay.
No, that's why we're here, of course. Hey guys, terrific to have you on the show. Ben Simpson from Collective Shift, Ryan McCall from Zero Cap. Great to have a chat. Thanks for joining us.
Thank you.
Yeah, well, thank you. See ya.
Yeah, well, I don't feel so bad because somebody from our audience has said, what is OG? And I'm saying it's the original. OG just stands for the original.
Come on, get with the lingo.
I'm clearly a Bitcoin, right? I'm old school. Listen, we're getting a lot of questions in, and some of them we did answer in that previous session, but some will be answered into the sessions to come. For example, talk about projects. Does crypto invest in projects? Look, we'll be discussing much of that in the next sort of hour and a half. But again, thanks to our panel that just joined us, Ryan McCall from Zero Cap and Ben Simpson from Collective Shift. Look, Andrew, you're up next, aren't you?
Yep, we're going to talk about blockchain, smart contracts, oracles, NFTs, decentralized exchanges, and DAOs. We'll do that in just a minute. Stay with us.